Oops. I think I started it before. Oh, we get 5 minutes.
Oh my God, Blackstone.
What's happening? The dumping?
It's down there.
Is it below 100?
118.
Oh, beautiful. Amazing. Help me understand why Asana isn't $40 and it's still holding.
Wish I could tell you.
Roblox 97. I say PFE. PFE. COVID. Anything up today besides of Netflix? Netflix up.
Go
Clorox.
figure.
Broadcom. Yeah, I got all that stuff. It's probably, by the time this is done, we're done here, this is probably going to be game time anyways. Netflix. It's just kind of basic. Around 6, VIX. Dude, Clorox, man. Yeah, tech. Tech is the old playbook, right?
Yep.
I'll zoom. Barely flat. I was hoping for that little... Oh, shoot. We kind of did get it. It would be a Teladoc, and it would be Zoom. And some drug companies. And continuing the staples. Yeah, Pfizer, dude, looks strong. Daily, hourly, on the 30. Huh? We'll see.
Let's see. Yeah, it does.
Oh, yeah, look at that. Okay, so I'm looking like Carnival open down and full reversal already.
Yeah, same thing with Norwegian.
All right. Oh, all right. Ready to start. Yo, I think, hopefully they can hear me, but I'm good. All right, so I'm just gonna jump in really quick. We got a couple of guys in the Discord looking for some trades, kind of bouncing around there. This Monday, I think, is gonna be fairly muted, but let's go ahead and get into it. Really quick, just gonna go through our disclaimer. There's a link in our Discord if you want to take a look, but there you have it. So jumping into this week, just want to do a quick recap. I think really it's been a tough market to trade for sure. I think for any swing trader, definitely. The average daily range of like the S&P is just getting bigger and bigger. Normally, holiday season is a little bit slower, a little bit muted, but not this year. I don't think we're going to have one of those years for sure. So expecting a slow and quiet holiday season, I just not feeling like it's in the cards right now. But to jump into last week, we had a couple things. I think really if you're trading the markets right now, you're probably thinking, okay, so Wednesday we had an FOMC meeting. Powell comes out, has the speech, and the markets just explode, like huge rally, but quickly slammed on the very next day, pull all of that back and then some. And you kind of think, well, what's going on, right? So really, it's all about inflation. I think this time around, he's clearly acknowledging that inflation is an issue. But at the same time, when you look at what's going on, they're still doing bond purchases for the next 3 months, and there's no official rate hikes in the forecast at all. The market is pricing in some rate hikes, but that's also kind of a new thing. I think if you go back a few months, there were no rate hikes expected in 2022, and now there's like 3 rate hikes expected in 2022. Actually, there's in COVID, if you were trading during COVID, there's a tool, a CME tool. If you Google like CME plus FedWatch, there's a pretty cool tool that'll show you how many rate hikes are actually being priced into the market. But in large part, it's really, okay, so inflation's here, it's coming. What are we going to do about it? Powell says we're going to do something about it, but then nothing actually gets done about it. So the market just doesn't like uncertainty, and that is very much uncertain. It's been feeling kind of like it's been tough, man. Almost feeling like the moment that you have a handle on what's going on, something changes, and poof, it reverses on you. So the moral of the story is going to let the markets come to you, identify your support resistance levels, and be patient, right? A couple headlines. I think I found some. A funny one, but somebody had their baby in their Tesla. That was funny. But really, the biggest headline that I could find, I think Steven's on also, was really just Manchin saying he's not going to support the Build Back Better plan, which is Biden's kind of like the social spending plan. Really, it's boosting healthcare, affordable healthcare, all the clean energy spending. So we'll take a look at some of those type of trades like Plug or Fuel Cell, and child and elder care, I think, is what is also in there. I'm just going to jump in really quick to the next one. So we're pretty much done with earnings. This is the last Dow 30 component we have to report. That's Nike. That's actually today after market. And then that's mostly it. I think for the most part, everybody's beat minus Disney and Boeing. Doesn't mean that they actually had good price action. So I can assume we might have some kind of similar beat and skeet for Nike this week, but we shall see. So this week, again, most of the week is pretty quiet except Thursday. So when we get to Thursday, that's when it's going to be, you should be on watch. And I think in this market right now, it's really just been better to be available for an opportunity to present itself. So not to be heavily invested, but if something shows itself as an opportunity, then you can go ahead and jump on it and really take some profits quickly, so you can roll that over to the next opportunity that's going to show up. I have a feeling that we'll see a lot of those coming into the end of this month, just with the low volume. And yeah, Friday's actually closed. So Friday, I think Friday's the 24th, right?
Yep.
Oh, Christmas Eve. So last one of these until Christmas. Nice. Anyway, so Monday, really not much to go through. Tuesday, kind of same thing. We do have what's called current account in the red book. Just in case you don't know, current account is the net flow of transactions. So like, are we in the U.S.? So is more money coming in or more money going out in terms of goods, services, interest payments, things like that to the U.S. A low number is bad for GDP, and we will get some GDP numbers later this week. So this might be a little precursor. And again, this is actually Q3, so we're actually in Q4. This is all prior information. Nothing's going to really be a big deal. Redbook is year-over-year sales for large box, actually retailers. So kind of cool. We got some retail numbers coming out as well. So Wednesday, we really start getting some news. GDP, all this is just our growth rate, price index. Core PCE is going to be the big one, but I don't actually expect this to move markets very much. Just again, this is all Q3 metrics, and we are firmly in Q4, about to close out Q4. So these have all pretty much been out there, and this is really just the final revision of what is going on. Consumer confidence, this is different than consumer sentiment. Similar, but a different CB is Conference Board Consumer Confidence. So we will get this number Wednesday. Not a huge market mover. Consumer sentiment is, and I believe that we get that as well this week. Existing home sales haven't really been moving markets, but again, somehow we're still buying lots of homes. So that might start to change if we ever get an interest rate hike, but we shall see. On to Thursday. This is the big day. So core PCE, this is the biggest thing that we're going to get this week. And this is personal consumption expenditures. So how much are people spending? This is inflation, really. So we're going to get personal income, personal spending, and really the rate of increase in our goods and services. Core, if you're not familiar, core actually excludes things like food and energy, so gas, things like that that make up probably about like 70% of our spending is actually not included in this number. So for whatever reason, that's what it is. But this is the most important one, core PCE, because that is actually the Fed's primary inflation gauge. So if there's one number that the Fed actually watches to determine how important or urgent it is to make a move, this is the one. So right now, previous number came in at 4.1%. And this is year over year, so 4.1% higher than last November 2020. And the consensus is coming at 4.5. So again, if something comes in as expected that doesn't move a market, what does move markets are things coming in unexpected. So I would assume, if we're call it 4.8, something like that, that would probably slam markets across the board, probably bonds and equities, actually. If we get something similar, 4.1 or lower, which would actually be like a no change, I wouldn't expect a huge jump in the market, but at least stay the course and not likely super bearish. And again, I think this is the biggest thing. So it's all about inflation right now. Jobless claims, I think just static. Consumer sentiment, yeah, we do get consumer sentiment this Thursday. So around 60, mid-60s is fine. I think that's anything lower than that. Anything lower than this is actually, so consumer sentiment just is essentially how much, it's supposed to show a picture of like whether or not consumers are willing to spend their money. So it comes into things like retail sales, spending, it's very related to this inflation number. And new home sales for the month of November come out Friday as well. But really, that's mostly it. We can jump into the charts, but Friday we are closed. So short week this week. Just gonna jump into it. Steve and I were really looking at some of these guys. I think we had. I have a couple headlines actually. So what was this? So I was just kind of scanning what are the updates on the COVID headlines. This is a little vaccination chart. Or how, what states are fully vaccinated and what did that timeline look like? That's fine. This is our woman gives birth to her Tesla in her Tesla. Bullish.
Takes over the driving. Bullish.
Love it. I think this is really going to be the biggest thing, right? So we have a couple things. We have the Build Back Better plan getting stalled, right? So not likely to go through this year. That was priced into the market, so that's going to be coming out of the market, and that would not be good for some of the clean energy, healthcare stocks. So we'll take a look at this, and then we have this kind of like flyer, right? We don't really know what's going on here. As far as we can tell, it's not as bad as Delta, but it's more prevalent. So really, I don't have it here. I'm just going to be looking at likely headlines regarding hospitalization, right? So if you remember back in the day, the hospital occupancy rate, or are there enough beds to keep everybody? That was the biggest thing. So ICU, here you go, 18 state ICU capacity 15% or less. So this kind of stuff is what I'm going to be monitoring. If this keeps popping up more and more, that's going to be cause for some concern in terms of the market. And that's that. I mean, I can't really read much else into that, but just the market. This is we're just taking a look, quick heat map today. Red across the board, unfortunately. This is FinViz. Sometimes I'll use this. It gives you quick gainers, losers. This is free site. But so jumping into the charts, we're going to see indexes as a whole doing one thing, and we might find some specific stocks doing others. So that's really kind of what we're going to be looking for. We're going to be looking for what's called relative strength throughout the week. Things that are showing resilience while the broader market is really, really weak. This is just very clearly weak. This box right here is last week, not huge. This box right here is an average week's range, and you can see just every week that's going by, this average week's range is getting exceeded more and more. Yeah, it's getting pretty volatile out there, that's for sure. So we broke a key level. So two things today. We gapped down at the open. We had a gap down at the open Friday as well. So here's this gap. 480, 466 doesn't mean it has to get filled right now. Just something to note. And a gap this morning at 461. We had a prior high, which is a key pivot for the S&P at 455, which goes all the way back to the end of summer, essentially, end of summer highs. So that's where we are, essentially across the board, end of summer highs. And we really want to see the indexes get right back above this to be able to keep at least a non-bearish outlook. While we're down here though, this is looking very dangerous, very ominous and dangerous. So that said, I think taking this average week's range, you could take more of a bearish skew, and I'm gonna kind of pinpoint this support level. 445 and change was a very key pivot on the last sell. Sorry if I'm scrolling too fast. So 445 here, this is a level that got sold and defended at the same time in late September, early October, when we had that big, scare, market crash scare. So that's going to be key. This is where we left the zone, this chop zone, but unfortunately, if we can't get above that, we're going to be sitting firmly in here. So going back to these levels, if we can't get above 440, 455, next level is 445, and then we can revisit, and we'll be on the charts early January. I think, is that the next? No, we got one more. On the 27th, we'll have a meeting. I just really don't want to see this happen. Unfortunately, what I can say is that there's just no volume, so it's very likely that happens this week. I'm just going to take a target, throwing, just using this 457, which was Friday's low. Let's see.
I see 458.
Yeah, sorry, 450. Yeah, 458 even. And we can have, so this is like a double bottom in that most recent sell-off. So this double bottom would be 449.
Yep, that's what I have. 449.50.
As long as we're above 449.50, call it. I would assume that this bounces. The thing is, like, it's all COVID, you know, it's a lot of reactionary stuff. This could bounce if we stay above call it 450. You know, an average week's range would put us right up to 465 on the high end, which would make perfect sense, right? I think we'll have some reactions just based on, you know, headlines, and again, low volume. We can have some big gaps and some pretty volatile moves intraday. If we don't get above 450, let's say, on the low end, I think you'd be looking right back around that 445 level. So call it 445 to 465 for the week. Maybe some iron condors if we get some good enough volatility. I think the VIX, by the way, is sitting at 25. We don't usually start here, but option traders, this is a pretty good thing to know. We were looking after this last kind of gap up, you know, expecting some kind of chop within this range right here. So we are getting exactly that. Ideally, I'd like to see this come down below 25, but anything above 25, we want to be net sellers of volatility or net sellers of options. So think credit spreads. They're not always as fun as debit spreads because takes a little bit longer to get paid out, but this is really absolutely where you want to be, anywhere above 25 right now on the VIX. So could have an opportunity for some ratios. We can get a little bit lower here. Crude oil selling off. This is really going to be, you know, the COVID situation, right? Is the reopening trade back on? Right now, this is telling us no, it's not. So oil going down means the market is not anticipating a whole lot of travel. Qs, I think, unfortunately, our favorite index, this guy is actually looking the worst. So we can hope for a bounce. Unfortunately, where that last double bottom was on SPY, this is where the Qs are, and we're below it. So right now, can't really be super bullish. I think at best you could be neutral. And we have a pivot right around 376 for, which unfortunately would be a lower low. So it could bring it down to 373 on the week. Something like that. With hard resistance at 366. I mean support. That's right on this prior sell-off. So again, we are below the late summer highs at this point. Can hope for a bounce, but we have a little gap fill at 386. Here's what you want to look for. If the index is trading around 385 or higher, you don't really want to be buying that type of breakout. You have resistance. This is solid resistance at 380. Yeah, 384. I would be a seller here, 384, and a buyer down around anywhere below 370, assuming that you can get a little bit of a bounce. You got a little trend here, something like that. Yeah, we might get a bounce. It might feel good, but it'd be more speculative than not. In a situation where rates are going to be climbing, this is not the index that you necessarily want to be in. We're just kind of battling. Is it inflation, or is it a stay-at-home type trade right now? We're not really sure. So this is the industrials, again, sitting on their 200-day, below their 50-day. This is probably a pretty good area for a bounce, but we'll have to see. Technically, support 344 and change, and we have a major gap this morning. Major gap. Just like we're gonna have pivot. Your pivot is at 350. So if you're above 350, we should be going straight back to 357 on the Dow. If you're below that, 343 at least would be your target on the low end. IWM was probably scariest to look at this morning. So we have this, very, very long established trading range that we are coming up to the bottom. We're very close to the bottom. The hard bottom is actually 207. So that's the number to watch. If you're below that, you can't be bullish, like at all. But right now we're bouncing once again kind of close to this bottom. So expect a little chop. I think the better trade here is just, it's clearly not calls, but it's just going to be short puts somewhere below here. Put spread, or maybe a put calendar, so you have a little protection in case it does break through. Put calendars would actually be better in this instance, for sure. Might take a look at that. I do like that. One last look. Here we got Bitcoin, my favorite, firmly seated in a very nice downtrend. So, not a bull, right? Short term, but that's okay. I mean, long term, just a big, giant series of higher highs and higher lows, really. So sitting on our 200-day, we're across the board. Looks like we're in decision land for everybody. If this is a low, even if this little flash crash at 42.2 ends up being a low, that would be yet another higher low, super long term. But yeah, we're in bounce territory to me. Actually, I like this level right here. I like that. I'm just going to tag that. This is going to put you at 43.1, essentially. Maybe even the top of this guy. Oh yeah. Look how that lines up perfectly. So if I want to be a dip buyer, I'll be a dip buyer right in here. Between 43.3 and 42, give or take, for round numbers. I like that a lot. Just gonna take a look at the alt situation. So yeah, still in our breakout, good for the altcoins. Altcoins are not going to be nearly, they have even higher highs, essentially. So they'll get hurt just as bad, actually a little bit worse, percentage-wise, near term. But when you pull those charts back, you're going to see significantly higher returns. Although sometimes it doesn't feel that great when you're in a pullback. So Bitcoin pulls back, expect a pullback in the alts, expect it to be pretty volatile, but then expect the bounces to be equally volatile. Looks like we're getting a little bouncy off the open this morning. So very red open. If we get to see, we like to see that in terms of what type of opens are we buying. Like to see a bloody red open, and I like to buy right about when it's flipping to green. Unfortunately, we're not there just yet. Only down 7 points in S&P. Ooh. We'll see. give it a bit. I'm not going to be in a rush today. I'm going to jump on the charts. So, Steven, you sent a couple, right? So
I sent
AMD.
I sent a few.
Yeah. So this is
Um,
nice. AMD, you're looking at 135 support, give or take.
135. It's just below that. We're sitting right near the bottom of that wick on the left shoulder that I have mapped out. So it hasn't completely failed yet, but we definitely need to see a little push above 135 before we can get in there.
All right. Sorry, I'm just trying to pull it up so it's live. I got all these drawings on my phone. Yeah, so we're struggling with the 50-day for
Yep.
sure. I have the same lines. Yeah, and so nice little pattern. If it can show itself, would be ideal. Ideally, as long as this shoulder here is above, even if it's a little lower, it's fine. But you know, right at that 134, what was this wick?
Yeah, I think right down to like 134 and a little bit of change.
Yeah. Oh, it tagged it beautifully.
Like,
Look,
yeah, perfect. Like
to the penny.
134.20 was perfect.
So this looks good, actually. How would you play something like this right now?
So right now, I mean, there's just not a volume to push it with any momentum to the upside. So really, what I want to see is a small push, maybe up to about 136, and then wait for a very small pullback to play some weeklies on it. But I really want to see today close at least at 135 to play the January 150s that we were talking about.
Nice, yeah. Oh, are those in our buy range? Buy zone?
Yeah, they've come down like 50% since Friday.
Nice.
I think they were trading at about $4.
Very cool. If you're wondering where he's coming up with 136, right? So this would be, you know, inverse head and shoulders. So head and two shoulders, right? 136 is really this kind of base level here, right in the middle of the center kind of formation, right here. 137.70 would be very clear. And what that would tell you is like this, you have a short term downtrend here. So if this is going to go up, it has to break through this downtrend, right? So you're looking for a break, and you don't want just like a little nibble type bounce, right? You want to have something a little bit more substantial, because you could easily have something like that happen, right? So what you want to look for, and you're not going to try and catch a falling knife either. You want to look for this to break right through 136, and actually probably come back down and bounce off of 136 to really signal your entry. So this is a perfect example of wait, patience, and let the trade come to you. Let the market come to you. You don't have to be in a hurry to jump into it. But and targeting January 150 expiration, I actually like that a lot. This level here too. So just this trading range. That's all you have to do. That would make for a very nice trade if you can get it. But again, don't jump the gun. Just know, hey, you're watching for this. Maybe set a little alert. I'll actually feed this into the Discord if we do get that to go through. And then, all right, so we got some more. So you got Apple.
Yeah, wanted 170 to hold.
170.
Obviously, I wasn't anticipating the indices to gap down as hard as they did. So we're right below that 170 level.
All right. Match it up. Yeah. So your 170 is coming over right here. This is still okay. Again, just kind of patience, right? Like,
Yeah.
you don't want to jump into. These are all from the server, so they're listed. This would still be valid. You still want to see. You want to see a breakout, up, tag, bounce, right? for a tradable entry, probably only trading. What would your target be here?
I mean, I could definitely see it going back to test the 180s, but
Yeah.
that would almost make it a triple top. And what do we say about triple tops?
Yeah, that could be, right? So if you're going to take a trade, though, one thing for sure. So this would be, you want to make sure that you're trimming right around here, right? 177.15. You want to take a look at what are the possible areas where this chart can kind of get stalled and say, stop. So just before 180, at least take a little profit, or maybe just put a stop on your trade, rather. Yeah, that'd be better, just to put a stop on your trade. Because if it runs, yeah, it really could run. You have a pretty large, longer term uptrend. So this actually reminds me very much like the old Tesla chart, where it felt like it was just at a big drawdown. But if you zoom out, this is actually perfect bounce level for like a dynamic support. Check that out.
Yeah, absolutely.
So I very much like this. This is something that most people wouldn't catch right here, this little dynamic support. So that could hold. Again, the steeper the slope of a support or resistance, the weaker it is. So your horizontal support resistance are going to be the strongest. But no, these do come in play. So this doesn't change the story at all. It just gives it a little bit better. Actually, something like that would be pretty cool. So this would be, probably a month plus hold. So you want to be looking likely January plus in terms of options. I'd say buy probably double the time that you actually think that you're going to need, as a general rule of thumb. Just going to pull up a firm. You got two charts here. Oh, same chart. Two possibilities. Yeah, so this is an example of a pivot, right? So a firm pivot at 100, nice, clean, even number. And we are below.
So it bounced right at the open, back almost exactly to 100. I think we got to like 99.60 or something. And it ended up rejecting that level just as we planned. But when you go into the option chain, there was no volume at the time, so the spreads were super wide, which is why I didn't end up playing that to the short side. And it ended up being okay because it didn't really move much after that.
Yeah, something like this, I think this would be an example of, if there's not a lot of volume, what could you, and volatility is high like it was this morning, you could sell some $100 call credit spreads, bull call or bear call spreads, really. So if you sold, you could take something like this and say, hey, the next level of resistance higher, something like 110, you might be, and if you see it push up and start to get rejected anywhere in this kind of range, right here, between 105 and 100, right as it starts to fall back down, I could be a seller. I would be a seller probably of some maybe some $5 wide call credit spreads, probably about 30 days out, 2 weeks out, something like that, early January, if I can get some premium. Doesn't have to be a lot. Like it could just be, give me a $5 or $10 wide call credit spread, and you're going to want to really collect at least about 30% of the width of the strikes. So if it's $5 wide, I'd want to collect about $2. $10 wide, I'd want to collect about 3 plus. Oh, you have a huge list here. Let me get these. All right. Micron, yes. Did you see Broadcom, by the way? So in line with this, matches up with your AMD also. So Micron, yep. Actually have, you can do this two ways. So one here. Let's just use yours. All right, so a little bit of a flag, pennant, whatever you want to call it, but this is decision making in the process, right? We are going to get a direction. what I would typically do is just take, where's your midsection? If it's going to go higher, it really needs to clear this 85, I think, which is exactly
Yeah.
the level he's got pinned out, right? So 85, right? So when you do this, you see this is called like a flag or a pennant formation, whatever you want to call it, doesn't matter. You want to find where's the value area for this consolidation zone. Consolidation being like this, 1 month box that has been, and the value area is right in 85. So if from here, right, you break above 85, it's got to be above 85. So if it could go, let's see, something like that. Here, do you have a trade laid out? I don't see it.
I do not know.
This is break semis. Yeah, so set an alert here. If it goes over 85, time to be bullish for sure. I don't know that I would want to try and pick the bottom of this. Yeah, I would be wary going long here, but if you do get this trading over 85 on Micron, then that's your all clear sign. Till then, this is kind of like a no trade zone, or just a watch for me personally.
Yeah, I agree.
Shopify here. Ooh. Where do we land on this guy? That looks good.
Broke below 13.
113. Broke it. Well, I still like it. This is good. This is like team trading, man. I love it.
Yeah, I do too.
Always good to have like multiple perspectives. I wouldn't notice this here either. So I might not be so precise in terms of like needing it to be an exact, not lower low. Technically, yeah, lower low. But it is good support. Definitely good support. What we might be able to do is, and again, I'm just kind of feeling a little bit more neutral right now. See this 50-day resistance at 15, and you got lower support right around 190 or 1090 here and here. So might see, I'm gonna see if we can find something that's worth our while. What is that? Wow, that's a very wide, very, very wide iron condor. I don't know if I'm going to find anything that good. But yeah, let's see. You got second level support. I might be looking something. If it bounces up off of 1330, man, that feels so far away from here. But that would be potentially clearing. Otherwise, if you see a little bit of a pullback, if we see reversal candles, I think first trade here, you could probably lay out some short puts. What do you have? Yeah, 1330 I think would, based on what you have written up here, Stephen, is probably going to be the same all clear level anyways.
Yeah.
So 1340, something like that. Kind of watch, throw it on your radar. Alert, right? And give me an alert just in case you go below here. In case we do go below, that could be a short. Could be a nice short, actually, if you get something like that. Moderna, so I'm going to go into here. So Moderna, did not get a breakout. Same kind of thing. We were looking for a breakout. Wow, look at that. Instant rejection. Nothing. So it was either going to be selling 350 to call spread or 295 puts. Oh, definitely not 295 puts on this open. Man, this is just the volatility is insane here. What is that? 12% off of the open. So Moderna had good news, a good headline that I did catch. Was essentially, hey, our boosters are effective against Omicron. But when you get this kind of situation and the good news is immediately sold off, that's just bearish. It's just bearish for the stock. So although the headline seems bullish, the reaction is bearish. So it's a sell the news event, clearly. So I would just be selling cover calls right around probably this 300 level if I wanted to take a trade. I'd wait for it to push a little bit, but I would be non-bullish. How's that? For sure. Zoom, just want to take a look. Zoom, this is kind of like, do we go back into reopen or stick with staples? What's the market going to do? Are we going to be zooming more? Does the market like this guy again? Just still watching. So we definitely have this support or downtrend, clear downtrend, wanting to break. It's not the first time that it's wanted to break though, so be aware, right? We had one before fail, but we're above this first level. Is this one of those wedges that you guys were talking about the other day? Well, that's an ugly wedge.
Yeah.
No thanks. Let me see. So I'm just gonna zoom out on the daily. So a little bit of a double bottom right out here. So it's good to have this view. So very far outlook. This was prior, this is way back, April 2000 support, 270, 170, sorry. We bounced, bottom, bottom. Ooh, that looks like a clean double bottom on the daily. That looks like a very clean double bottom on the daily. And clearing prior high. So this would signal at least a reversion trade, not necessarily a reversal just yet. Reversion being, reverting to the prior downtrend, which really be something. We'll just do these two. Would bring it to right about here. So you gotta see. This could easily get rejected right around the 215 level. I like this though, as long as it can close above. Wow, it's gonna close above 2. I mean, this is just so sold off. If you get another pullback and you get a bounce around 190, 187, I would rather take this. So if I can see it bounce right around here, I would take that at least up to here, 213. So 190 to 213, that makes for a nice little option trade. Otherwise, otherwise a tough one. You have to have this on like high alert, high watch.
Yeah.
This could do all kinds of stuff. You have a nice double bottom, yes, but you have this resistance right here. So this is like a baba. It's so far down, it needs to come so far before you can think it's even close to a bullish situation. Twitter, same thing. Just flat, man, just flat. So looking for something on the low end, 390 or 39 to 40. No movement, just stalling out. I'd like to wait for it to fill this gap. And based on what I'm seeing in the market, I'd just rather be a seller of credit spread. So maybe like a 430 or 43, 45 credit spread, some tight. That can be just a quickie in and out. But we'll see. We'll tee something up. I'll throw an alert here in case we get there, and an alert on the low end in case we break down. Either way would signal. If you're below 40, 175, that would signal like long put to me. If you're testing 43.25, something like that, that would be, or sell some calls, some bear call spreads, something like that. So I got, oh, one of the, they wanted to look at, let's take a look at Pfizer PFE.
Oh yeah.
Pfizer. So this was actually surprisingly strong, right? It not surprisingly, I guess. It matches all the criteria. So huge uptrend, like unquestionable, right? You're just going, chugging away. Big old, I don't know what you want to call this, kind of cup and handle situation. Playing out here, also playing out here. Strength on the daily, we'll pull it out, pull it back in a little bit just to look at the daily. Actually, I can do that. So Pfizer, 1 hour. So bottom left is daily, just a continuation. 1 hour you have here. So if 63 or 61.39 was, I think, December 16th. I'm gonna go with 61.39. It's looking good. It could chop around a little bit. It might not be quite ready, but if it does break above, let's just go for a clean 62, somewhere around there. If it's trading above 62 or closing above 62, that would be, you know, buy some calls type of situation. Looks like we tagged that this morning, so it could happen. Could happen real quick here. This is bullish. You got some pretty good oscillators kind of firing, right? MACDs look good across the board. Everybody looks like they're about to flip up. This moment may be, actually look at this. This moment might be a buy moment right here.
Oh.
Yeah, this could be like a little intraday, right? Something like that. Let's take a look at the chain really quick.
Oh, actually, yeah.
Yeah, seriously. So typically day trades, we go shortest time to expiration. 92 is our target, right, for the initial. That's trading for $90, give or take, right now. And I'm gonna look at that. So 30,000 volume. First thing that you want to look at volume, and you want to look at open interest. You want to look at the ratio between volume and open interest. So the volume, which is how many contracts were traded today on the December 23rd, $62 call for Pfizer, traded 30,000 contracts today. Open interest is 3,700. So that means that coming into today, there were 3,700 contracts that were already opened. So it's open 10 times as many contracts today as it had coming into today. That's pretty bull. It's actually, it just means there's a lot of volume. What we don't know is you don't know if they're being bought or if they're being sold. So you actually have to dive a little bit further into that. We don't have time to go that deep, but I would be looking at something like that out of the gate for just a quick hit. That guy traded up to $1.30. So if you can get it under, again, this is time, right? So today you can get it around 70, close it around 130. That's a nice little 75% plus win on a quick little move. I like that. If you wanted to trade something longer term, wow. Longer term, I'm looking January, $65 calls. You know what? I'll go deeper into that into like our streams this afternoon. But if you're interested in that kind of stuff, jump into our Discord and trade with us. And we walk through these all the time. For now, I think that's it. Do you have anything else, man?
No. Yeah, I think we covered everything I had.
We'll see him after Christmas. Adios.
See ya.
See ya.